Have you ever wondered how banks afford those giant glass buildings, marble floors, and free coffee,
Else.
while paying you just a few cents every month for keeping your hard-earned money with them? Here's the twist. The bank is using your money to make money, lots of it. And the craziest part was people don't even realize it. So, how exactly do banks make money? Stick around, because once you understand what's going on behind the vault, you'll never look at your bank the same way again. Let's rewind to something that happens every single payday. You deposit your check, feel responsible, maybe even proud. Your account balance looks good. You feel secure. But what if I told you that the moment your money hits that account, the bank gets to work turning your dollars into profit for them? Not for you? Number one, the deposit illusion, where your money goes to work. Let's start with something called fractional reserve banking. Sounds complicated, right? It's actually pretty sneaky. When you deposit $1,000 into your bank, they're not keeping all of it locked up for safekeeping. In reality, they only keep a small portion, let's say around $100, and lend out the rest. That's right, your money is being loaned to other people. Now both you and the borrower think you have money. It's like your dollars are being photocopied and passed around. Here's an example. You walk into a bank and deposit $1,000. Then someone else walks in and borrows $900 from the bank. That $900 goes into another account, and the bank loans out most of that too. It's like a financial chain reaction. According to the Federal Reserve, the system creates more money in the economy, but for banks, it creates something even better: interest income. Number two, charging. For borrowing the power of interest, interest is the golden goose of the banking world. Every time someone borrows money, a mortgage, car loan, student loan, or personal loan, they have to pay back more than they borrowed. That extra is called interest, and that's where banks cash in. Let's say someone takes out a $10,000 loan with a 5% annual interest rate. That's $500 a year, straight to the bank. Now imagine thousands of people doing that. It's not just a trickle, it's a flood of cash coming in daily. Even better for banks, the loans they give out are using your money. They pay you maybe 1% in savings interest and collect 5% or more in loan interest. They make a spread on every single dollar. It's like they're buying wholesale and selling retail, but with money instead of merchandise. Number three, credit cards. The cash cow in your pocket. Let's talk about credit cards. Banks love them. Why? Because they come with some of the highest interest rates in the game. Some cards charge as much as 20% or more if you don't pay off your full balance. That's like handing the bank a $20 bill for every $100 you still owe, and it doesn't stop there. There are annual fees, late payment fees, balance transfer fees, cash advance fees. It's like a never-ending buffet of fees, and banks feast on it. If you keep a $5,000 balance on your credit card and only pay the minimum, you could be handing the bank thousands of dollars in interest over time. That's a long, expensive relationship with your wallet. Number four, ATM fees. The toll booth on your own money. Here's a frustrating one. You go to an ATM that's not your bank's, you grab $40 in cash, and suddenly you're hit with a $5 fee. And then your own bank might charge. It's another fee for using an out-of network machine. You just paid $10 to withdraw $40 of your own money. It's like getting taxed just for wanting a slice of pizza. Banks made over $1 billion in ATM fees in a single year, according to Bankrate. It's one of the easiest income streams they have, one of the most annoying for you. Number five, monthly maintenance fees. The subscriptions. You never signed up for some checking accounts, come with a maintenance fee. You might be paying $10 to $15 a month just to keep your account open in less. You meet specific requirements, like a minimum balance or direct deposit. That adds up to $120 to $180 a year. And for what? Digital statements and an app that crashes every other week? It's like paying a monthly fee to enter your own garage. Number six, overdraft fees. Kicking you when you're down. This one hurts. You swipe your card at the grocery store. Unknowingly, your balance is too low. Bank approves the charge and then hits you with a $35 overdraft fee. So now your $6 coffee just cost $41? Overdraft fees are a huge moneymaker. In fact, American banks collected over $10 billion in overdraft fees in a single year. That's billion with a B. These fees often target people who are already financially struggling, turning an accidental misstep into a costly setback. Number 7. Foreign transaction fees. The price of wanderlust traveling is fun, but using your debit or credit card abroad, it can get expensive fast. Most banks charge a foreign transaction fee of around 3%. You spend $1,000 in another country, and you're handing your bank $30 just for being adventurous. It's like paying a premium just to buy your own souvenirs. And the worst part, many people don't even realize they're being charged until they check their statement. Number 8. Business banking. The bigger the client, the bigger the fees. Banks don't just cater to individuals. They serve businesses to and. That's where some serious money flows in. From processing payroll and handling merchant services to offering business loans and lines of credit, banks provide essential services. For a price, a small business might pay hundreds of dollars every month just in account fees, transaction charges, and service packages. In large corporations, they're worth millions in banking relationships. More zeros, the more profits. Number 9. Investment services, selling you the fancy stuff. Ever walked into a bank and seen the sign for retirement accounts or mutual funds? Those are investment products banks sell to you, and every time they do, they take a cut. Whether it's a one-time commission or an annual management fee, they're making money on your money. If you invest $100,000 through your bank and they charge a 1% fee, that's $1,000 a year just in fees. Over time, those fees compounded, not in a good way. You're growing your money slowly while the bank's profits grow fast. Number 10. Dormant. Account fees, the cost of forgetting, have an old savings account you haven't touched in years. Your bank might be quietly draining it with inactivity or dormant account fees. Yes, they make money when you use your account. They also make money when you don't. Imagine logging in after a few years to find your balance eaten up by monthly charges. It's like charging you rent for parking an empty car. Number 11. Mortgage-backed securities. The risky business model. This one's a bit more advanced, but important. Banks sometimes package the mortgages they issue and sell them to investors. These are called mortgage-backed securities. The banks collect money from the investors up front and keep servicing the loans. It's a way to free up capital and make even more loans. But if this sounds familiar, it should have inched the same practice that played a major role in the 2008 financial crisis. When done responsibly, it works. But when greed takes over, the whole economy can come crashing down. Number 12. Treasury services. Playing banker to the government, banks also serve the government. They help issue bonds, manage massive wire transfers, and handle public funds. For this, they get paid. Fees, sometimes millions. They're like the financial middlemen of government cash. Not exciting, but highly profitable. Number 13. Data monetization. You are the product. Here's a spicy one. Some banks use your spending data to target you with ads. They might not sell your personal identity, but they know what you buy, when you buy it, and how often. This information helps them and their partners tailor offers just for you, offers that make them money. Ever feel like your bank knows you a little too well? That's not an accident. Number 14. Wealth management. The VIP experience with a price for the super rich. Banks offer luxury-level services like private banking, estate planning, and exclusive investments. It's like being invited to an ultra-elite financial spa. These services don't come cheap, but for banks, they're worth it. If a bank manages $100 million for a wealthy client and takes a 1% cut, it's $1 million a year just for advice and access. The more wealth you have, the more the bank earns. Now, let's bring it full circle. The marble floors, the fancy lobbies, the nice pens that no one returns. They're not free. You paid for them. Every swipe, every withdrawal, every convenience has a cost. And that's how banks make money. So what's the one bank fee that drives you absolutely crazy? Tell me in the comments. I'd love to hear your experience.